Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video, I'm gonna, just as the title implies, it's rinse and repeat. So as we head into Wednesday's Fed announcement, you might be looking at this and saying, well, what do I do with this market right here? And it's very difficult to say because based off the analysis that we gave in last night's free video, we knew that based off of the 78-minute squeeze, we've got the 2-hour up here, but you'll find that squeeze referenced here. We knew that the whole play was basically just trying to get it to play out the way that we had seen the squeeze work on the previous time frames, and as it worked out, it was picture perfect to perfection. So what do you do with the market after it makes this type of extension? Well, first you decide what type of time frame that you like to trade, and as we head into tomorrow, I think, a swing time frame with somewhere between 5 or 6 days, maybe the monthly expiration is the spot to focus on. Primarily, we will have to see how tomorrow's action trades. When I look at this chart, I always like coming back to something like 2 or 4 hour charts because they give you a good swing-based reference, but they're a little bit more intimate than daily charts. And the reason why I point that out is because if we've been able to use this concept of rinse and repeat in the Dow, well then let's look at that concept again tomorrow. Okay, the part we've done here is take the move back up into an extension, but what we want to focus on now is a pullback that we might be able to buy. A couple of ways that I'll show you to do this. One that I like to use is the trend line tool, and you can come in and just measure. Let's take a swing high to swing low, and if you'll measure that before clicking the second time, you'll see that this is a correction of 123 points that took 6 bars. And if we come back to here, all we're doing is looking at what these previous declines have meant in relation to this overall prevailing trend, and you run that exact same type of work from the high. Now you can do it with a trend line to get a feel for exactly what we're doing, but let's just say that 1990 or 19.9 is the high as we head into this announcement. Well, then I would be looking at something like this for the first opportunity to buy that pullback. Now you will have to recalculate that if the Dow makes a new high overnight, but this is the type of strategy, these are the types of time frames and signals that I'm going to be using to try and participate in the move for the Dow up into 20,000. So I hope you guys find that helpful. I also wanted to make you aware of a class that Chris is going to be doing. It's going to be the Brecher ledge trade. So as we do with most of our courses, we're going to have the strategy portion of this on December 14th from 6 to 8 in the evening, and then we're going to have a live trading follow-up with it on Thursday, December 15th. So if you guys find that interesting, there's some more information on the class for it. You'll be redirected after this video, and I hope to see you there.